Hello and welcome back to the channel, and today we are going to be breaking down how to DYOR, or in other words, how to do your own research. I'm going to be giving you 5 points and some bonus points, so stick around to the end of the video so that you can get these bonus tips as to things to look for or things that may pose a red flag when you are researching projects. You see, just like the stock market, if you're a stock investor, you would need to know how to probably read some balance sheets and understand these companies so that you know where you're putting your funds. Likewise, in cryptocurrencies, you need to understand how to read a project, what to look for so that you can allocate your funds appropriately. Of course, just a disclaimer, nothing said here is to be taken as financial or legal advice. It's just for education and entertainment purposes. So let's dive right in. So the first thing we want to do when you're evaluating a project, which most of us will do, is do a price analysis. And with a price analysis, we can check that via two common places: coinmarketcap.com or coingecko.com. They also have apps for the various CoinMarketCap, CoinGecko, they all have apps. Or you can just go up on their website and you will have the list of coins. You can sort it by rank, etc. to get a little description on your project, see the price action. You will see a chart with a line as to how the price has been going, and you can navigate between 1 hour time frame, 24 hours, 7 days, 30 days, for a year, or for the maximum time that the coin has been in existence. You can see how the price has gone, what percentage is it at, is it up, is it down, etc. So that's number one. You do a price analysis. Number two, you want to figure out, is there enough capital for this project? And so capital in the crypto world is raised in several ways, but one of the major ways projects tend to raise capital is by something called an ICO, or an initial coin offering, which is just offering the coin for sale before it gets on exchanges, for example, right? And with an ICO, what you want to do when you're researching, you want to see how much money was actually raised in the ICO. What you're looking for is it in the tens of millions of US dollars? That's a good sign that the project has enough money to develop and do what it says it wants to do. If it's in just a few millions, or worse yet, a few hundred thousands, you know that the project may not have enough money to do what they say they want to do. They might encounter problems and may have to disappear, which unfortunately many cryptocurrencies had disappeared due to lack of funding and financing, right? So you want to see if the ICO had generated tens of millions of dollars. You want to also find out, were the team allocated tokens? And if they were allocated tokens, you want to know what percentage of tokens of the total supply was allocated to team members. And you can find this information on a site called Messario.io, right? So you can get there, and when you go onto Messario, you want to search up the project you're looking for, and then hit the profile tab, and then you should see a pie chart that will tell you how much was allocated to the team, etc., what is going, where it's divided up, right? You want to find out that. If the team has been allocated tokens, you want to also find out, are they selling their tokens, right? Because if they are selling, that can also contribute to, the price movement, etc. One of the other things you want to check out when you are researching a coin is also, was it a fair launch coin? So not all projects actually allocate coins to team members and so on. Sometimes a project may just directly sell to the public. That is something we call a fair launch, right? So that's the only time you may not see information on allocation, if it was a fair launch project, right? Your third point in terms of what you want to be doing when you are looking into a project is, are there any developments taking place? Developments meaning substantial developments such as mobile wallet development, browser extension, wallet development, developments for mainnet launches, things like upgrades to improve decentralization, to improve security, to improve speed. If the coin is out and development is taking place, you can definitely tell yourself that, all right, this is a good project, it's functioning, it's working. However, if the project was out for a while and there's no sign of any new developments taking place, no improvements taking place, you may want to keep away from that particular project, right? Of course, nothing is just to be taken in a vacuum. You have to put all these points together in your entire research strategy, right? So you would want to see if there's any developments. Fourth on the list, right, which should be high up, but this list is not in any particular order. What is the community engagement looking like? And when we say community engagement, we are talking about their Twitter account. If they have a Discord, how active is the Discord? How big and how active is it? Are there several people in online? Are they discussing things? If you're following, if they have a Twitter, most of these projects have Twitter. If you're into cryptocurrency, you need to be on crypto Twitter, right? So are they getting a lot of retweets? Are there many comments, likes, retweets, right? These things will indicate an active community, and those are good signs of a project, right? So all these social platforms, of course, if you go to coinmarketcap.com, on the information page of a project, you will usually see community, and you will then see if they have a Discord, if they are on Reddit, if they have what's the Twitter handle. And it's safer to go through the coin market cap or the CoinGecko information to get to the correct social links, because on the internet in crypto you have a lot of replicas, and you may have groups that isn't the official group of the project. So you want to make sure that you follow the links from CoinMarketCap or from on CoinGecko. But community engagement is very, very important in terms of a project, right? However, community engagement could also be tricky in that we know there are a lot of projects where you can pay for followers, you could pay for likes and retweets and so on, and it may not represent the truth. However, on-chain analysis represents more of a truth than anything else. And on-chain analysis will give you certain information like how many wallets are there active, how many holders of this particular, coin or token, how many are there, right? This can give you an idea, as to if your project is worth it, right? Don't just follow the numbers and vanity metrics of followers on Facebook, because again, like I said, you can purchase these things, and you don't want to just be following an account. You see 200,000 followers on Twitter, but then the engagement is low, or maybe the engagement is high, but then when you go over on your, let's say you are using an explorer, right, like Etherscan, and you go to the project, and then you're seeing, there are only 20 holders of this particular project. That is a clear red flag. Look to stay away if you are not seeing a significant amount of holders. As well, when you're using a block explorer and an explorer for a particular project, you will be able to see transactions, right? Are people, buying and selling, right? It also highlights how long ago a particular transaction had taken place, right? So you want to see, are people buying and selling? They're engaging with this particular project, so you know that the engagement is good. On-chain analysis doesn't lie. You can't buy that. You cannot purchase activity on these explorers, right? If in terms of on-chain analysis still, if the project that you're looking at is in the DeFi space, you have two places you can go to do some research, which is DeFi Llama or DeFi Pulse, right? Those are two sites for DeFi projects. If it's a layer 1 protocol or a layer 1 project, again, if you're doing the research, let's say even on coin market cap, they will tell you this is a layer 1 project and so on, right? So if it's a layer 1, you can literally just use an explorer. So an explorer being BSC scan, Ether scan, right? And you will be able to find what I just highlighted: number of wallets, number of active wallets, and the trend over time. Are the number of holders growing, right? So if you saw when you got on there were 10,000 holders, right? After a week, what is it now? 20,000 holders, to indicate that there's actual engagement with the project. That's important to look for, right? Of course, the explorers I just mentioned, if you're dealing in an Ethereum project, a lot of tokens are built on the Ethereum blockchain, and so they are represented as ERC-20 tokens, right? That's the standard or the protocol for Ethereum. So ERC-20 tokens, you go to Etherscan, and that will basically highlight all the wallet information and some other, as I said, on-chain stuff, right? On the blockchain is what on-chain really means. This is for the newbies. If you are dealing with Binance, a coin that's built on the Binance Smart Chain, which is represented as BEP20, then you go to BSC scan. So those are two of the common, explorers that you use to research on-chain analysis for these types of projects. last but not least, right? This is not the bonus, so hold on to the end. But last but not least, in terms of your research, you want to understand what we call tokenomics in this space. And tokenomics can be broken up into two main categories. Infinite supply of coins. There are some projects that has no cap to the amount of coins that will ever exist. And then you have maximum supply, which is there's a fixed number of coins that will ever exist. So as we know with Bitcoin, the maximum supply of Bitcoin will be 21 million whole Bitcoins, right? So with these two, infinite supply and maximum supply, we have some pros and cons and some stuff to consider. So in terms of infinite supply, one of the benefits or the pros of that is that this in a constant supply or constant inflation, right, constantly bringing out new coins, acts as an incentive to validators or miners to continue to secure the network. Again, watch my video on what is blockchain to understand, how transactions are recorded and so on, right? So it incentivizes validators or miners the more coins that come out into existence, because usually a miner or a validator is paid or rewarded in the particular currency. So as there continue to be creation of this coin, that will be an incentive for them. So that's the pro when it comes to your infinite supply, right? A con, however, of infinite supply is that the more of the particular token that's produced or created, it suppresses the price, because unlimited supply, just supply and demand, metrics, right? The more of something that exists, it will usually tend to either suppress the price, keep it down, or if the price went up, as more and more keep flooding the market, you would not have that high demand, or you wouldn't have that scarcity factor to it. So that could then have the price remaining low. So when you're doing your research, you definitely want to know, is this project that I am looking at, does it have a cap? Does it have a maximum amount that will be created, right? And so you will decide based on the pros and the cons if you would like to get into a project that does not have a particular supply, right? One thing to note though is that ensure that the rate of inflation, or ensure that the rate at which these new coins come out is not very high, right? And one point to note as well in terms of staking in a coin that is a project that has an infinite supply, you can definitely stake it, especially if we are in a bear market when prices tend to already go down. You can stake it, and provided that staking it creates or brings a higher APY than the inflation rate, you will then still be in a very good position, right? So ensure you could stake, right? But ensure that the rate of inflation is not too high. You do not want to get into a coin where there's a whole bunch of it created every week, right? So that's important. Now, in terms of the maximum supply projects, right, the pros of that is that price is likely to increase because of scarcity. Just as with Bitcoin, there will only be 21 million coins in existence. How many people are there in the world? As Bitcoin and blockchain technology continues to be adopted, right, more and more people will be desiring to get invested, to invest and to have some cryptocurrency, but there's a fixed supply. So this alone could definitely and has definitely brought the price of BTC from that mere 10 cent, 0.008 cent range all the way back in 2009, all the way to where it is now, which is around 41,000 US dollars for one, right? So it's because of that maximum supply, that small maximum supply, it creates scarcity, and that can definitely drive price. So any coin where the supply is low, you can expect to see, the price doing some nice things. The cons, however, of having a maximum supply is that there's no real incentive. Now, yes, they say, like with Bitcoin, when the last coin has been mined, well, that's a good way. That's a few years from now. We more than likely won't be alive at that time of the last particular coin, the whole Bitcoin being mined, the last set of Bitcoins are being mined. But what they say with coins that basically have a fixed supply is that the fees, the transaction fees, as people buy, sell, transfer, whatever, that's what's going to pay, the the miners or the people that secure the network, right? But that's yet to be seen. So there's really no incentive if you have a maximum cap, because in other words, if you just look at it as it is, if the last particular coin has been mined, then where's the reward? Again, the video on blockchain will explain, how the whole system works with miners, and how they get rewarded for solving equations, mathematical equations. They get rewarded in the coin, and that is how the particular coin becomes available, right? So there's no incentive for that. Point to note though, you want to assess how the coin, if it is a maximum supply, how was the coin allocated or distributed amongst, let's say, team members or key players in the space, in the particular project. You do not want to have a project where the majority of the coins are only in a few wallets, or only a few people hold the majority of the particular project, right? Because at any time, if they decide to go rogue, or they decide to, as we call it in the space, rug pull, then they can leave you, as we call it, holding the bag, where they dump their coin on you, and you hold it, and then it just goes to nothing. So you want to make sure that the coins, when you check on your Explorer, you want to check the wallet addresses, and you will usually see what percentage the top 10 wallets, what percentage of total supply these wallets hold. And so if it's a little bit, 2%, 1%, then you are in a good place. If you're noticing that only 3 or 4 wallets have over 50% of the total supply, that's something that's a red flag in the cryptocurrency space, right? And now we are on to the bonus section. So there are some other stuff that you could look at to really determine if you would like to get into this particular project, if the project is a good project, or if it exists, if it's likely to last and be around. And first on the bonus list is the trading volume behind this particular project. So when you are on an exchange, you usually may see volume. Even if you go to CoinMarketCap, you will usually see volume, and then you'll see a figure. That figure is actually in US dollars, right? Equivalent to US dollars usually, right? And that indicates liquidity, or in other words, that equals the amount of money that's being traded within the particular coin at the time. So of course, the higher it is, it can then indicate to you as the investor that, all right, if I get in here and I am looking to take profits, healthy profits at some point in time, I can cash out. That's the basis of volume. You want to make sure that you can cash out. So if you go to a project and you realize that the project only has $10,000 trading, you may be stuck holding the bag. And so when you try to sell, you won't be able to sell. Or let's just say you get into this coin and then the volume is so low, it's down $10,000 in terms of what's traded. But what you have appreciated in value, and you have $1 million worth. Now these are big figures, but these are quite possible figures in crypto. So if what you have is greater than the volume being traded, you will be stuck holding those coins and not be able to liquidate, right? So you need to watch out for trading volume. Bonus number 2, the number of exchanges your project is listed on. Now, of course, when a project now launches, usually it will start off with just a few. So you are looking at over time, what is the availability of exchanges, right? How easy it is to trade. And so people will look for, exchange listings on Kucoin, on Binance, on Coinbase, right? Not just only on decentralized exchanges like PancakeSwap. You see, if your project has been out for a while and it has only been able to make it on PancakeSwap or Uniswap or BakerySwap or these decentralized exchanges, you may have a little red flag on your hands. So you need to pay attention to that, right? Is the project delisted anywhere? That could indicate some problems in the future. For example, XRP has an ongoing case, right? And they have been delisted from exchanges as the case goes on until a decision is made. So with a project like that, it is high risk to be involved. Yes, it's still available on few exchanges like Kucoin.com, right? But it has been delisted from many other exchanges due to the lawsuit by the SEC, right? Which leads me to my next bonus point. Is your project being sued? Is it on the radar of the SEC? that could also indicate some problems, or that might probably affect your decision as to, is this the right time for you to get into this particular project. Bonus number 3. Are there any pullouts of core team members, developers, or investors? Right? If these people are pulling out, especially more than one person, you need to investigate what's the reason, because maybe there's something, a red flag might be looking to peek out there. If the core people, the project owners, are pulling out and dropping off, right? Another bonus point I have for y'all: are there consistent technical issues? Cryptocurrency is all about in the digital space. So if you have a project and you are consistently experiencing technical problems, you may have a problem. You don't want one day that you invested in a project and then due to technical issues it has been having, it just disappeared, right? So next bonus point: white paper. Right now, that should have been in CoinMarketCap. Following the websites, you would have a white paper that you should be looking at to get all the detail. Even if you don't understand everything, the white paper is the description of the project. It outlines everything. Now, if your project doesn't have a white paper, no kind of documentation, no website, you might be in for some trouble. So ensure that these things are present, right? Of course, most projects, even meme coins, get listed on CoinMarketCap and CoinGecko. So if your project is not on CoinMarketCap or CoinGecko, you may be in some problems, right? Although do not only use this point, because again, meme coins that have no value often get listed there as well, but there's just something else that you can look out for, right? The developers of your particular project, are they known or are they anonymous? Now, not all the time anonymous developers means red flag. However, it can lead to a red flag depending on the project, right? It's always better to have documented developers, people that you can see a name and you can check back, okay, this is the owner of the project, he has experience here, there, wherever he has been in the space, however long. It's always good to know your people, or what they call it in the space, that your developers are doxed. That's the term, right? And basically, those are your points. Those are some ways in which you can do your own research, right? And that is how we know, if a project is good. That's the deep dive we will usually take to understand if a project is worth it or not. So it's not just about the price or the pumps or the spikes. Sometimes spikes can be false, and so if a spike is false, the one way to know if a spike is false, when you're doing your analysis on CoinMarketCap or CoinGecko, if you have seen, at one period of time the coin was just flatlining and then it just went up for whatever reason and then came back down, right? You're not sure if it was just a hype, if what happened exactly. And so you can go to websites like Cointelegraph or Decrypt and literally see, what was the news surrounding this project that may have caused it to spike. Now, if the news that caused it to spike is something like celebrity endorsement and that kind of thing, you may have a problem on your hands, because it may just be a pump and dump coin. So there may be certain projects that, okay, you hear your favorite celebrity got into, and then the price just shot up for that particular period of time. Everybody FOMO'd in, but then everybody cashed out as well, or the owners of the project just cashed out right away and left you holding the bag, and that could show up on a chart and mislead. So don't just look at spikes and think that the project is good. So thank you for watching this video. I hope you check out all the rest of videos in the cryptocurrency series. Of course, these videos are being made specifically for newbies in the space. This is in no means an advanced crypto channel. It's not intended for users who are more advanced. It is to get people in the space from the Caribbean world, of course, starting with my own country, Trinidad and Tobago, and the wider Caribbean, and eventually globally. So all my social media handles are below. Of course, in this space, we also have a problem with a lot of people impersonating. I will never message you asking you for crypto or to manage your crypto. And be careful with your private keys for your wallets. Never, ever, ever give it out to anybody or click on any suspicious links that ask you to type out your private keys to have them access your coins, right? So keep that safe. See you in the next video.